This is the World Financial Report podcast. My name is Randy Marshall. Joining us is our financial and diamond expert, Harold Siegel. We're taping on March 14th, 2019. Our time is 8:10 a.m. Mountain. Connect with Harold at rarecoloreddiamonds.com. rarecoloreddiamonds.com. Last Sunday, we got through the time change. This Sunday, St. Patrick's Day. U.S. dollar this morning at 96.77. Canadian dollar 74.96. The pound at 132. The euro at 113. Gold at 12.95. Silver 15.15. Gold-silver ratio is 85. Platinum is 8.25. Palladium is 15.27. We'll talk about that momentarily. WTI, $58.48. Brent, $67.84. Nat gas is $2.85. Bitcoin in U.S. dollars, $3,851.41. Bitcoin in Canadian, $5,133.50. The Dow is at 25,709. S&P 2810. Nasdaq 7637. The TSX at 16,149. A Fiat recall leaves palladium buyers bracing for supply shock. Now, Fiat is recalling almost 700,000 gasoline-fueled vehicles, and that could spur additional demand for palladium. The market already reeling from shortages. Replacing the catalytic converters in these vehicles would require an additional 77,000 ounces of palladium. Now, prices of the metal used in vehicles to curb greenhouse gas emissions has been climbing this year as producers struggle to keep up with demand. This eventually will be a bit of a supply shock, according to Maxwell Gold, Director of Investment Strategy at Aberdeen Standard Investments. Overall, this does paint a very positive picture of growing emission standards globally, particularly in the United States, for palladium and gasoline engines. Production of the precious metal will trail consumption by 545,000 ounces this year, according to Citigroup. Newer and stricter regulations to curb emissions in gasoline vehicles have been forcing automakers to boost their purchases of palladium, fueling the surge in demand, even amid a slowdown in car sales in China, Europe, and the United States. Harold, they are saying that short term, we could see $1,650 palladium price. And one of the reasons is the tightness in the spot market due to the demand, and that will be positive for the palladium price.
It certainly will, but it'll be very detrimental to the car manufacturers, and that's for sure. It's happened before. I remember back in the 80s that palladium was on a run. Ford invested very heavily in palladium, and palladium prices skyrocketed to $1,200 and almost put Ford out of business because nobody was prepared for that price hike. So we're at $1,550. To go to $1,650 is not a big deal, but it's going to be a point in the foreseeable near future that platinum trading at about $850 is the metal that they're going to have to turn to. So we've seen this before. We saw when the price of platinum was way too high and palladium was down at 170, 180, 200. Obviously, the car manufacturers switched to palladium because the price difference was so substantial. We're seeing the same situation again. So if it does reach a point to where there's no palladium available, either they're going to have to stop producing catalytic converters, which is not going to happen, or they're going to have to start gearing up to using platinum, and then you'll end up seeing platinum prices doing what palladium is doing, and palladium coming back down. The unfortunate thing is that palladium is such a small market. It's not that platinum's a huge market, but it is larger than palladium. Palladium is the least known metal of the four, and basically, again, Russia really controls the supply of palladium. Some comes out of South Africa, most of it comes out of Russia, and I've seen them do this before. So the car manufacturers better be very careful, because again, if they keep palladium off the market, or if there is a true shortage, which I believe there is, you're going to see prices, basically price them out of the market, and they're going to have to gear back up and get back into platinum. I think platinum is the best play of all the metals at this point. Gold got up to $1,360, and now it's back down to $1,290. In actual fact, it's down about $15 today as we're taping the show. the market was up almost every day this week, and then today it dropped down about $15. So again, I stick by that price of 1380. Every time we get close to that price, the market can't hold it and tends to pull back down. That's why that price of 1380 in gold is so important, that we need two closes above 1380 in order to convince me that gold is going to break out.
The man credited with calling the 2008 financial crisis says the next 20 years in the stock market will break a lot of hearts. Jeremy Grantham, an investor credited with predicting the 2000 and 2008 downturns, told CNBC Thursday that investors should get used to lackluster returns in the stock market for the next 2 decades after a century of handsome gains. In the last 100 years, we're used to delivering perhaps 6%, but the U.S. market will be delivering real returns of about 2 or 3% on average over the next 20 years. He says the cyclically adjusted price to earnings ratio, CAPE, a popular gauge of stock market value created by Nobel laureate economist Robert Shiller, stands at 30.04, well above its historical average of 16.61. Grantham, who has been predicting a meltdown in stocks since last year, said that not even the recent go-slow reversal by the Federal Reserve on rate increases and the European Bank's decision to roll out a fresh batch of bank stimulus will push stocks significantly higher. He says you can't get blood out of a stone. I do agree, Harold. At some point, the United States, as they bring down their balance sheet, the Fed, the stimulus, it's going to have an impact on a lot of different assets, in particular the stock market.
Well, you better believe it. And that would really bring the whole country into a funk. So the fact is that if that is true, and I could certainly see that happening also, you're going to see the country go into a long-term recession because, the wealthy right now are making all the money. It's the middle class and the poor that are not making anything at this particular time, and it's really going to wreak havoc on the country. So we've always said that there's certainly roadblocks out there in the market, and the market is a gambling casino. The fact is that most people can't even afford to trade in the stock markets anymore. Certain prices are so high that it really prices out the general public from investing in stocks. Who's in the stock market primarily, are the hedge funds and the mutual funds type of thing. So I could definitely see that happening, but a decade or a 2-decade slowdown in the stock market would bring this country to a standstill.
As we mentioned last week, it was the 10-year anniversary of the bottom of the market, so it's been going strong for 10 years. That is a long time. A lot of the gains have come from stock buybacks by corporations. If that stops, and it is starting to pull back a bit, that will have an impact as well. Jeffrey Gunlack, who is a bond guru, says the stock market was and still is in a bear market. Gunlack says stocks could go negative again in 2019. He credited the market rebound to the 180-degree turn from the Federal Reserve. We mentioned it on the podcast that the Fed had talked about raising interest rates substantially in 2019, and that was completely stopped in its tracks at the end of 2018. 4,810 stores will be shut down in the United States by retailers in 2019, according to Coresight Research. Gap, Victoria's Secret, JCPenney, Tesla, and Abercrombie & Fitch. They are closing stores this year. Harold, that is a shocking number, 4,810, and here we are in March. You can see how the landscape for business retailers is changing dramatically.
My God, that's a very concerning number, Randy. It's unbelievable and just adds to the fact that the retail business is in big trouble. The brick and mortar stores are closing like crazy. We've seen loads of them this year and going to continue. And now Amazon, who many people felt was the cause of the retail change, towards online purchasing versus brick and mortar, is obviously finding issues also if they're going to close that many other satellite stores. So that's a major concern. Obviously, combine that with the fact that we could be in a 10 to 20-year recession type of thing that just doesn't bode well for the U.S. economy, which, again, you and I never really bought into in the first place. The fact is that the U.S. is doing better than most other countries, but there are certain situations within the U.S. that are detrimental to their growth. And the fact is, it's quite concerning to be in the U.S. at this point and see these type of situations unfolding. Personally, I wouldn't be in the stock markets at this particular point. There's no direction. The fact is that by closing all these stores, it's got to affect the unemployment numbers. It doesn't mean that, somebody will leave the Gap or Victoria's Secret and immediately find another retail job. The retail business is not in good shape. The malls are not doing well, which is going to hurt the commercial real estate market. So again, I just don't see great things moving forward. The markets are moving sideways. Nothing is really happening in any markets that's exciting at this particular point that we could grasp onto, that we could make money with. Palladium made a big move, but it's very unpredictable. And the fact is that where we can predict the fact that with a major shortage in palladium, that the prices will go higher. I've seen instances where platinum or other metals have made gigantic moves and then absolutely plummeted because it interfered with something happening in another area. So again, I'm certainly not convinced that the U.S. economy is in great shape, and stock market's trading in a range, metals are trading in a range. When you can, and what needs to be done is that interest rates needed to go higher. The Federal Reserve knows that, but Trump made such a big stink about it that it caused them to stall and to regress from raising interest rates. At this particular point, that is going to be a problem, because we should see a rise in interest rates, because the reason that the Federal Reserve was raising interest rates was because of the potential of inflation. So I think they're weighing at this point here what is worse off, a bad stock market and affecting the economy, along with what's happening, with the trade wars in China and a $22 trillion debt and everything else that's going on. Again, a raise in interest rates would just be detrimental, to the economy, and that's why they did what they did. But it's just another example of manipulating the markets, that the markets should be able to trade on their own volition. The fact is that if interest rates are important at this point, and you have to raise interest rates, by not doing that, you're manipulating the markets, and that's obviously the wrong thing to do.
Connect with Harold at rarecoloreddiamonds.com. rarecoloreddiamonds.com, that is his website. Learn more about investing in hard assets. Get our free weekly newsletter, the companion to the podcast from Harold. One stock that has taken a major hit this week, Boeing. Evidence has emerged that a Boeing 737 MAX, which crashed on Sunday, may have experienced the same problems as the plane that went down 5 months ago off of Indonesia. The Federal Aviation Authority cited similarities in the flight path of both planes when it joined regulators around the world in grounding the jets. That happened in Canada and the United States yesterday, with no indication yet as how long the no-fly order will be in place. Boeing's $600 billion plus order book for the model is at risk. Gary Cohn, the former head of Donald Trump's National Economic Council, said the president needs a win on Chinese trade talks and is desperate for a deal. Well, now it's more than likely the agreement won't be forged until April at the earliest. U.S. Trade Representative Robert Lighthizer, giving testimony before the Senate Finance Committee yesterday, said that America must keep the option of raising tariffs as a way to ensure Beijing lives up to any trade pact. Republican Senator Rob Portman said no deal would be closed without substantial changes to how China treats intellectual property rights. They rip us off in a major way. And then finally, the Brexit vote. That continues to be a disaster for the UK. If you were looking forward to March 29 as the last day you'd have to hear about Brexit negotiations, you will be disappointed. Another vote is expected today at 1 p.m. Eastern Time on whether to delay the date Britain exits the European Union after members of Parliament yesterday rejected a no-deal scenario. European Council President Donald Tusk said on Twitter this morning that he will ask EU leaders to be open to granting a long extension to the deadline. The pound is having another volatile session with short bets on the currency rising to the highest level since December. So those are three things that we're keeping an eye on. Harold, there was a piece of information that I found found this week, and I put it in the newsletter, and I don't think many people were aware of it. There is a GPS flaw. Security experts say they will not be flying on April the 6th. Don't look now, but there's another Y2K-like computer calendar problem on the way, and this one arrives in just 1 month, April the 6th, 2019. That's the day GPS receivers will literally run out of time, rolling over their time counters back to zero. Thanks to limitations in timekeeping for older GPS devices, many navigation systems may be affected, such as on ships or older aircraft, although your smartphone will be fine. But because GPS satellites are also crucial to digital timekeeping used by websites, electrical grids, financial markets, data centers, and computer networks, the effect of April the 6th may be even more wide-ranging. I'm not going to be flying on April the 6th, said one information security expert during a presentation at the RSA 2019 Security Conference in San Francisco this week. That is something that we're not hearing about at all, Harold, and yet I would agree. I wouldn't be flying. Obviously, you have the Boeing situation. You add in this GPS flaw. I don't think April the 6th would be a good day to fly.
No, I'm with you on that. Y2K turned out to be a non-event. Most people will think that this will be also, so it won't deter them from doing that. But better to be safe than sorry. There's no doubt about that. That's crazy. Nobody even thought of that.
Now, here's something that really caught my eye. The Wall Street Journal reported, we talk about a cashless society. Well, wait a minute. Philadelphia says, It is the first major U.S. city, Harold, to ban cashless stores, placing it at the forefront of a debate that pits retail innovation against lawmakers trying to protect all citizens' access to the marketplace. Starting in July, the new law will require most retail stores to accept cash. We haven't really heard a lot about a cashless society recently, Harold. It was really strong about a year ago, and it seems to have gone to the back burner for some reason.
I'm shocked at that, to be honest with you, because I know that in certain parts of Europe, they're certainly cashless. Parts of Ireland, I believe, is cashless. However, it's a major transition because there's still our generation. The baby boomers in the United States, for example, there's no way in the world that they could go to a cashless society. So you've got to phase out an entire generation, basically, before this could really be in full effect. So there's still so many of us in our 60s, 70s, 80s, and 90s that couldn't comply with that. So it's a lot bigger of a situation than most people would feel. To do it in Finland or in Sweden or some small place like that, it's much easier than to do it, in Canada or in the United States where there's massive cities and again, baby boomers and older people. So again, I'm surprised that that's even news at this particular point, but good for Philadelphia. I think it's important that cash is still in the system at this point, and that our generation still gets to be able to live our lives the way that we need to.
Harold's website, rarecoloreddiamonds.com. Connect with him and get our free weekly newsletter, the companion to the podcast. This week we have top 10 most expensive diamonds in the world. Number 10 is the Heart of Eternity. It's worth $16 million. It is a fancy, vivid blue-colored diamond mined in South Africa, and it was sold to the De Beers Group in the year 2000. Its carat size, 27.64 carats. Number 9 on their list, the Perfect Pink. The emerald-cut rectangular diamond was sold for $23.2 million to an unnamed bidder at Christie's Hong Kong auction. 14.23 carats. Was named the Perfect Pink because of its intense color. Number 8 on the list, the Wittelsbach Graph diamond, $23.4 million. This 31.06 carats deep blue diamond has a royal history. It was discovered in India more than 300 years ago. Graph had it recut in 2010 to remove all the impurities. Number 7 on the list, the world's largest flawless vivid blue diamond, was renamed the Winston Blue, and Harry Winston of the Swatch Group purchased it in 2014 for $23.8 million at Christie's Geneva auction house. Carats on that, 13.22. Number 6 on the list, the Steinmetz Pink. aka Pink Star, $71.2 million. The Pink Star was previously known as the Steinmetz Pink, discovered in South Africa in 1999. It is the largest diamond with a fancy vivid pink grade, and the carats on it, 59.60. It was purchased by Hong Kong-based Chow Tai Fook Enterprises at Sotheby's auction in 2017. But those are the first 6, and you can read the other group of 5 through 1 in our free weekly newsletter. Harold, those diamonds, they are the most expensive in the world and most beautiful.
Oh my God, I'm drooling over those, Randy. The number 10, that large, vivid blue, that was a heart, was it?
Heart of eternity. So yes, it was a heart-shaped diamond.
Unbelievable. Wow. Those, again, thank you for reminding us of those. Those are just absolutely unbelievable diamonds. And you've got to see the top 5. So just amazing. Just goes to show that, these obviously cannot be bought by the everyday person. You're talking about, diamonds that are selling in the 20, 30, 50, 60 million dollar range. So there's very few people in the world that can buy them. But they're not just buying them for jewelry. They're buying them because they're great long-term investments. The fact is that we've proven and shown over time in history that diamonds that have been held for a long period of time that are important diamonds have done extremely well. And these are just a few examples of how well some of these diamonds have done. And again, for an investor to go out and spend $40 or $50 million on an asset, they don't do it just because it's pretty and they want to own it. It's because it's going to have tremendous value and increase in value over the years to come. So just absolutely phenomenal to hear about those diamonds again.
Speak with Harold at rarecoloreddiamonds.com about investing in rare diamonds. We really believe there's an opportunity in the Argyle pink diamonds. The mine shutting down in about a year or so, only maybe 2 to 3 tenders left, and then that is it. 90 to 95% of the world's pink diamonds gone. We congratulate Jennifer Lopez and Alex Rodriguez, baseball star, A-Rod. They were engaged on the weekend. Jennifer, she's been married and engaged a few times. Ring that A-Rod gave Jennifer is approximately 18 carats, worth about $1.8 million. During his career, Alex Rodriguez made $575 million, retired from the New York Yankees, brings in money as an advisor to the team as an entrepreneur, and Lopez made $47 million in 2018, according to Forbes. Now, prior to being engaged to Alex Rodriguez, she was married to singer Mark Anthony. From 2004 to 2014, he had very good taste, Harold. He gave Jennifer an 8.5 carat blue diamond designed by Harry Winston. The estimate on that is $4.8 million. You can see a picture of that diamond in our newsletter. The most important diamond, perhaps, is the one that Jennifer got from Ben Affleck. Like I said, she's been engaged a few times. She's been married a few times. She's almost like the Liz Taylor of our times. Ben gave her a 6.1 carat pink diamond designed by Harry Winston in 2002. A couple did call off their engagement. Ben Affleck paid $1.2 million for the ring. That ring would probably be worth about $2.7 million. The ring that Alex Rodriguez gave J-Lo, it's a beauty too. Can't go wrong with a big monster white diamond ring, Harold, to impress a woman. So congratulations to Jennifer and Alex. We wish them all the best.
But this 17 carat is an emerald cut. They didn't specify whether it was a deep flawless, but it has to be up there if it's going to be, close to $2 million. So beautiful. Listen, she's had a phenomenal career. She's a beautiful woman, stays in great shape, works very hard, very positive, and helps charities and things. And I just hope that they do very, very well together.
Connect with Harold. Learn more about investing in diamonds. Rare colored diamonds at rarecoloreddiamonds.com. The World Wide Web is 30 years old this week. And the man that came up with the idea, computer scientist Sir Tim Berners-Lee, submitted a proposal for what would become the World Wide Web to his boss at the European Organization for Nuclear Research, CERN. The feedback he got from his boss, 1989, vague but exciting. was the simple and somewhat understated handwritten scribbled note back to Berners-Lee. I remember at the radio station when we got the internet for the first time, I think it was March of 96, and our general manager, and this was the case for a lot of management at the time, Harold, the World Wide Web, it's just a fad. It's not going to stick around. It is a complete fad. And how wrong those people were, it is still going strong today. What would we be without it? The world would be a very different place.
You better believe it. You wouldn't be standing in line and seeing 3/4 of the people on their phone every day. It's just unbelievable what we do with our phones. And I was noticing yesterday because we were in a store and my wife was looking at a couch type of thing. So she snaps a picture of the ticket. She snaps a picture of the couch. She's able to do all this. She's able to email it to different people and text it to different people and get different prices. And it's just amazing how it's changed our lives in such an unbelievable way. So you're 100% right. It's been 30 years, but we couldn't live without it, obviously.
Dubai introduces a camera that uses artificial intelligence to measure people's happiness. The technology analyzes the facial expressions of customers but doesn't save the information. Sure. The camera has wireless and Bluetooth connectivity and can take 30 frames per second from a range of 7 meters. Harold, there's so much of this technology out there. In fact, there was another story this week, facial recognition and its dirty little secret. Millions of online photos were scraped without consent as they were developing facial recognition. And people are concerned that it may be used to profile and target and use that technology for not so good purposes. So you can see there's a lot of positive that comes from technology, but we really need to stand guard at the door and make sure that we are very careful as to how this gets used in society. And yesterday, Facebook and Instagram were off, and for many young people not being able to access Facebook and Instagram, they had the shakes. They all went on Twitter and complained about Facebook and Instagram. So this world, Harold, it is definitely changing.
And hopefully for the better, but it is concerning. Again, one of the major concerns is the fact that so many retail stores are closing down, and that's got to affect the employment situation. And stories that we've had in the past about computerization and robots and things like that taking over the workforce. The foreseeable near future looks shaky. The economy looks shaky. When retail is down and Amazon isn't doing well and Tesla's not doing well and Facebook isn't doing well and countries aren't doing well, Brexit's a major problem. It's affecting the currency markets. Things in the United States are going sideways at this particular point. Major advisors are coming out and saying we could be in a 20-year recession. It's concerning. And the fact is that a lot of people don't know what to do during those particular times. And at this time, where I would love to make a recommendation that could make us a lot of money, there really isn't that much out there that is worth investing in. The fact is the gold market's trading back and forth, so is stocks. Bonds are concerning. Until things straighten out, the best thing to do is to remain extremely conservative. Don't speculate, don't leverage, and don't buy into markets just for the sake of, gambling type of thing. You've got to wait for the right opportunity. We've talked about gold since 2000. We are one of the companies that recommended gold back then when it was at $250 and rode the market up to $1,900. Saw the market fall all the way down to $1,050, and since then we've traded in 2011 from $1,050 to $1,350. It's a fairly wide range, but all in all, until the market breaks 1380, we're just not going to be able to break out in this market. So again, my recommendation at this point is just to sit tight, and the markets will tell us when's the time to get involved. We don't want to chase after palladium. It's way too risky. The next move in metals could be in the platinum market.
Our top story this week, Fiat Chrysler recalling 900,000 gas-fueled vehicles, and they believe, the analysts that cover palladium, this will be a positive. It will keep the price where it is, potentially take it to $1,650. But as Harold said, obviously we've seen the best move in palladium already. To chase it at this point would be very dangerous. Harold, any final thoughts as we close the podcast?
Again, at this particular point, just be very, very careful of the markets. there's nothing standing out at this particular point that is screaming buy or sell at this particular point. So again, my recommendation is just to sit tight. Don't invest in anything that's speculative and risky, and eventually the markets will tell us which way to go. I'd like to wish everybody a wonderful weekend and a very profitable day.
Happy St. Patrick's Day to everyone. And don't forget, connect with Harold at rarecoloreddiamonds.com. Rarecoloreddiamonds.com. Get the companion to our podcast, the free weekly newsletter. That's it, another edition of the World Financial Report podcast. My name is Randy Marshall for Harold Siegel. We will talk to you next week.